The general ledger, it's where everything flows into. All your financials, any money you're accepting from residents, you're going to enter it into MDS. It hits the general ledger. Also hits the tenant/resident account. Any bills you pay, it's going to hit the general ledger. Any journal adjustments you make is hitting the general ledger. And that's where you're going to see all of your transactions listed. It feeds things like cash flows and income statements and other reports. And at the core of the general ledger is your chart of accounts. So let's go into the general ledger and take a look at the chart of accounts to start with. The chart of accounts is a listing of all your GL accounts that are available for your transactions. Now, most of the time, you'll probably have one chart of accounts for your whole system, even if you do have multiple companies. That doesn't mean all of your transactions are mixed into the same set of books. You can combine companies, same reports, but what it means is that each company is going to share the same numbers, GL accounts to pick from when you do your transactions. And that's good because it'll really streamline your operations, for example. There could be certain times where different properties have completely different requirements, in which case it would make sense to have a separate chart of accounts. You can have as many chart of accounts as you want and then link each one to a different company. Another very powerful feature would be the chart of accounts additional information. Your chart of accounts should be the same for every company, but your main income account, maybe it's 4001 or something, is technically called rental income. You do have some co-ops and condos as well. In that case, you'll want it to be called something else like maintenance income. But for reports for certain companies, the GL account could be named differently.
Jesse, just to put a finer point on that, sometimes a client will think that because they have rental income in all their rental properties and maintenance income in all their co-ops, that they should create a second chart of accounts. But what we're saying is that no, that's your main income account no matter what. When it hits a co-op type company and it prints a report for that, don't call it rental income. Call it maintenance income or whatever we're overriding it on the company level. So that's not a good reason to create a totally different chart of accounts that could create complication within your organization.
You might be thinking, well, I'll just have rental income and carrying charges or maintenance, but that's also going to complicate things because you probably don't have companies where you collect both types of income. So you probably want one master income account for your rent/maintenance and just rename it per company. And there's some other options with that as well, which we'll get into. But for now, I just want to hit add account and I just want to talk about some of the options in here. So let's say we need to add a new expense account. I've already predefined my expenses. Start with 5. The group I'll talk about in a second, but let's just say it's electric expense. Really what I came here to talk about was the group and these two options. So maybe you have a bunch of expense accounts that are really part of your miscellaneous expenses or operating expenses. Maybe there's electric, water, fuel, all these different expenses. And sometimes on reports, you just want it rolled up as one. It's called operating expenses. Or sometimes on reports, you want to be able to detail it out. So that's where groups come into play. So any account that's part of a group could be rolled up or not rolled up on certain reports like cash flows. And these options make perfect sense where like on a detailed general ledger report, let's say your cash account, maybe you want it to list every single transaction from the cash account point of view, or maybe you just want summary totals because the transactions are also being represented on the other side of the equation, whether it's the expense account or the income account. So you could run your detailed general ledger reports so that certain accounts are summarized or certain accounts are detailed. That would probably come into play with a cash account. And then if you have show detail for cash basis detail reports checked off, it would show the detail for this account by default, unless when you run the report, you tell it not to obey that basically. But this is what controls that ability.